before gold was the main money, it was silver. And why? Because gold, you can't go in with a gold coin and buy food at a supermarket. It's too valuable. Like, you can't divide it small enough to get retail amounts. So the ultimate gold substitute is really silver, because silver can buy things in retail amounts. The thing is, like, once you have a functioning gold substitute, let's say it's a piece of paper that says dollar on it, and that equals, let's say back in 1970, where 1/35 of an ounce of gold or whatever it was, then you could use that as your silver instead of silver to buy things with. And what's more convenient, a gold substitute that's made out of paper, that's honest, that is backed 1-to-1, or a silver coin? Well, the paper is better because it's easier and it's more accountable, and it doesn't, like, it doesn't wear down, right? A paper dollar is a paper dollar, a paper pound, or whatever, 5-pound note, so when there is a functioning gold substitute, there's no need for silver, so the value of silver goes way down. But imagine a world where there is no functioning gold substitute anymore, because nobody trusts the currencies. So what are you going to do? How are you going to buy retail amounts of stuff? You have to use coins. You have to use silver coins. So in that time frame, after the collapse of the gold substitutes, chiefly the dollar, and then everything else will fall too, there's going to be a time when there's nothing to use but silver coins to buy retail amounts of whatever it is. When the gold to silver ratio returned to between 15 and 16-to-1, which was for hundreds, even thousands of years, the monetary ratio of gold to silver. It was always around 15-to-1, maybe 20, 25-to-1, in that range for thousands of years. And it's happened twice in modern history, 1918, 1980. Why wouldn't it happen again? Of course it'll happen again. It'll go down to around 15-to-1. And that's when there is no functioning gold substitute and nothing else can be trusted. Then people will use silver coins to buy their stuff. So that's what's going to happen. How long will that last is the question. It'll last until a functioning gold substitute can be reintroduced into the monetary system. How long will that take? I don't know, weeks, months. So you're not going to have that much time. So when you have that ratio, use your coins, buy some stuff. Inflation is not money. Inflation is a money substitute. When you print stuff, it always goes back into the past based on a pre-existing money, right? That pre-existing money is gold and silver. So when you are spending $1, you're not spending really $1. You're spending the gold value of that dollar. And the more dollars you print, the more inflated that gold value becomes, and eventually it turns to zero, and that's hyperinflation. So they can create money substitutes and spend them into existence through theft, and that's the problem. The middle class and the lower middle class has less and less, and the classes that benefit from inflation because they're close to the money printers, they get more and more, and you have this lopsided inequality that's due to theft, not due to not enough regulation, due to theft. And then eventually the peasants revolt and you have a societal collapse. That's what's going to happen. The problem is when you claim a monopoly on a money substitute and no other substitute can be used, and then you can print that thing and buy stuff with it and take stuff away from people without adding into the economy first, without producing first, that is theft. It wouldn't be so much of a problem if the government or allowed other money printers to be in the market, and then they would say our money substitute is basically a stand-in for gold and silver. We have it in our basement, come and check. And then you can use the Federal Reserve note if you want, or you can use ours, and eventually the best money, the most honest money would win. Just like in any business, the most honest and the best quality product of whatever you're selling, even if it's a money which is a product, will win. Well, that's what's going to happen now. I mean, there's no incentive to keep deposits in a bank because price inflation, and we're already seeing when it's the same thing in the current system. When the central bank fails, everyone with dollars loses everything. That's what's going to happen, and unless you have real money, gold and silver, then you're going to lose everything, and you're going to be left with whatever real assets you have, because your paper assets are going to go to nothing. Once you start printing money substitutes over your gold supply, then the people that receive that money grow and grow, and then they become dependent, and then you have to give them more and more, and then the things that they grow become dependent, and then you can't let anything fall. The pyramid just keeps getting bigger and bigger until the whole thing collapses. So there is no right thing that they can do. They should not exist. This is not how a society should be run, which is, again, based on theft. A central bank manages theft, which is any Ponzi scheme manages theft. So It's a basic Ponzi scheme is you when you pay off your existing creditors with new creditors. That's and that's what the central bank does. That's what all Ponzi schemes do. And then the federal government feeds off of that by selling bonds to pay off its old bond. Everything is a Ponzi scheme within a Ponzi scheme, and the biggest Ponzi scheme itself is the U.S. dollar. And when the dollar can no longer be exchanged for any amount of gold, that is the definition of hyperinflation, because the money is still gold, because all prices have to go into the past. You can't just invent a fiat money out of nothing. I think the ultimate collapse in terms of the dollar going either to absolute zero or returning to a fixed exchange rate with gold, that will happen after the next round of money printing. Meaning 2008 was the let's say the second to last stage, and then they're now trying to control their pyramid from growing too fast now, so they're raising interest rates and trying to keep the rate a little lower. But that's going to create another collapse, and another pyramid is going to fall. It could be Credit Suisse, it could be any bank in Europe that starts it, because all these banks are stuffed with multi-trillion dollars of derivatives that they have to be bailed out, because they will collapse the pyramid if they're allowed to fail. It'll lead to another round of printing, and after that, I think it'll be done within a matter of weeks to months. All banks were basically forced to bet on lower and lower interest rates. So I think Credit Suisse has like $8.1 trillion of interest rate swaps that it's done with other parties, and who knows who they are. And that's basically an interest rate swap is when you agree to swap floating rate for fixed rate. So when interest rates rise, the value of those swaps go down, and the bank has to pay more and more, because their counterparty is paying a fixed interest rate, and now the bank is paying the floating rate, which is going higher and higher, so they're losing money. But in an environment where the central bank is constantly lowering interest rates, it's always a winning bet until they stop. So they're always caught at the end of these things with a whole bunch of credit derivative paper that is going down in value, and that creates the bust for all the banks. And then they have to start another round of printing again so that they don't collapse. So they'll start another round of printing, and nominally the banks will be fine, but they'll be trading around worthless dollars and worthless euros and worthless yen and all the other stuff that's worthless. And then it doesn't matter what they do, because they won't have any real value in them anymore. Printing is inflation. You're talking about having an issue with rising consumer prices, or basically an issue with consumers realizing what's happening and getting out in front of the central bank theft and dumping the currency. Is that going to happen? Absolutely, it's going to happen. That happens at the end of every cycle. It's an inevitability. It's not something that can be avoided. Once you start